Hello, okay, I'm going to use Chartsmart now to do another sample of backtesting. Uh, as you know, Chartsmart has about 12,500 companies, all of the ones in the main indexes in the US and Canadian exchanges. And you can go to chartsmart.com and take a free trial for a month. What I'm going to do now is we're looking at a chart on IBM. I'm going to go to the filter menu, and you can see under the filter sets these are samples, and in this case these are candlestick ones, and I just want to show you how this works again. If we go to filter groups, you can see that when you get Chartsmart there's some samples like beginner and intermediate, and these are all sample sets of filters, and there's advanced, and actually I've put in some other ones here on my own. But then you have these empty groups, and these are ones where you build your own, and they're normally empty. Okay, so basically what happens is if I go to beginner and I were just to do a simple set, you could say here's one that says New York stocks trading over 100,000 shares today. Well, if we look at the criteria, they're pretty basic. We've selected under the exchange tab New York companies, and just specifying that their volume is over 100,000 shares, and then we run it, and then we get the list out of 12,500, and there's 2,000. Okay, simple. Now let's get into something more detailed with this. Now the idea with backtesting is to compare your screens. You can customize different screens. You want to know, well, how would this one have done over 10 days compared to the other ones? So what I'm going to do in this example is choose an area. This is a personal group of filter sets 2, and I've put in some custom screens here. Now what I did is I made a template, and let's look at the template, and it's got companies on the main exchanges being Toronto, Nasdaq, New York, and the Amex, and they're right here. Okay, now I've also chosen to exclude Canadian warrants and rights and preferreds and units. I'm only looking at companies between $10 and $1,000, and ones where they have traded at least 95% of the last 30 days, which would be 29 days or something like that. So they're going to be fairly active. Now this is like a template, and if I run that template, and I'm not sure if I have it so it excludes ETFs or not. I don't think I do. So we get 5,400 companies, and we could scroll through those, of course, but let's call that our universe. Okay, now I've taken the same template and I've combined it with, in each case, an additional special candlestick screen, and I'll show you how I'm gonna do a couple more so you can see how these were done. But you can see here under kicking, I've got calculated list number 1, and I've put in here this is the actual formula for whatever that candlestick name is, the kicking one. And in Chartsmart we've included all the different candlestick options. So what I'm going to do here is just show you that this is the template, plus I've got this one for kicking. And if I were to do a doji star, or let's say I do that, you'll see the template is the same, the main screens, but I've included custom calculated list number 8. Now these custom calculated lists are one of the more sophisticated tools in Chartsmart, because basically you can see what's happening is it's saying the close yesterday is lower than the open yesterday, and various formulas are done with the variables, so you can actually customize. And in customizing these variables, the open, high, low, close today and yesterday, you're able to make these different candlestick patterns. So okay, I've made, there's custom 8, and the hammer, I think I put in number 9, and they all kind of look the same. The engulfing is number 10. Let's look at the formula. So you can see engulfing simply means that the close yesterday is less than the open yesterday, and the close today is greater than the open today. and the close today is greater than the open yesterday, and the open today is less than the close yesterday. So that's the definition of this engulfing, whatever it is. Now, okay, and we've got one more, the harami. So the idea is I'm collecting some candlestick screens that are supposed to be bullish, and I'm going to see how they do, how they compare against each other. But let's add another one. Now remember, I've got this template, and the way to do it here is I've made this template already in here, and it's a text file, and I do it up here, and what I can do is go import, and I'm going to call it candle number 6, because you can see in the upper left, but I don't have a name yet, so I don't know which one I'm going to do. So I'm just going to write no name. Okay. So what we've done is, if you look at the criteria, they're identical to the template up here, which is good. So we used a custom list number 11 last here. So number whoops, sorry, I went out of the filter menu. Let's go back to the criteria. Let's go to the use specify tab, and let's take number 12. Okay, now this is the way the custom filter or custom criteria menu looks for making your own screens, as opposed to the pre-made ones in Chartsmart. And if I go create formula, I can put the variables in here, but you can also go to our formula database, and we've actually put in a bunch. And I'm going to scroll down here. You can see they say candlestick bearish, and I'm going to go to the bottom and just take another one, and let's call it abandoned baby, and you see it's supposed to be bullish. Okay, so there's the formula for it over here, and this is a bit of a description, but what we can do is paste this into the formulas. Okay, and there it is, and that's the formula. Okay, so we close this, and it puts it over here, and we know it's called an abandoned baby now. So we're going to rename this, and we're going to call it abandoned baby. Okay, abandoned baby. Okay, now let's I could do another one, but we've got 6 samples here. So what I can do now is I'll close, and I'm going to go to the backtesting area, actually before that I'm going to change the chart to candlestick. Okay, so let's go here to arithmetic candlestick, and you can see that they're really tight together, and we're looking at a weekly chart. Let's look at the daily chart, and let's zoom these so they're quite wide. Okay, so you can see, we can see them fairly easily, and they're the various candles there. Okay, so I next am going to go to the filter menu again, and let's just run this abandoned baby and see what we get. Okay, out of the 12,000 companies, let's just see what we get for the current day. Okay, so it doesn't bring us any, and so that's not going to help us. So what we're going to do is we're going to go in here and change this screen, and we're going to take a different one. Okay, so let's go down here and take another bullish one, and we'll call it we'll find the, I don't know a lot about these, so let's go 3 white soldiers. Okay, so I guess we've got 3 white bars going up, so let's do that one instead. That's probably what we should have done. Okay, close, and we're going to go rename it 3 white soldiers, 3 white soldiers. Okay, so I just want to check this one, and let's run it and see what we get out of those 8,000 companies or 5,000 companies that are in our group, and there they are. So we've got 55. Let's go back to the group and begin scrolling, and you can see on the right there we've got 3 white bars going up. I don't know exactly what 3 white soldiers means, but that's what the formula is getting. There's a better, clearer example. Okay, so there, and there you can see there's always 3 ones on the right, and that's what we want to see. Okay, now let's go to the backtesting. We'll go to backtesting, and I've got all the backtest files. So what I'm going to do is look at what's selected, and you can see that I have selected all but that one. So I'm going to go view all, and I'm going to add that one. And now we have selected, we've got them all. So now we're ready to go ahead and compare them. So what I'm going to do is I'm going to say, well, what if I bought all of these ones 5 days ago? And up to today, what would have happened to these? So I'm going to run a non-incremental analysis, which just means 5 days ago to today. Okay, so we're going through them, and there we go, it's done. So let's go view results and see what we get. So what it's saying here, okay, is the template. If we click on here where it says template, it says there were 5,390, and the average rate of return over that period of 5 days was 0.7. So it actually outperformed all these other ones. But if you look at the Doji star, it shows higher. And let's check, but that's only because there was only one company. And what we can do is go view by count, and we can see that actually engulfing was the only relevant one that came close, and it was the same as the template. So none of these really outperformed what would have been the average, but they could have been combined with some other screens, or we could have done different ones. And you know, I haven't made this so that it shows anything better at this point, because this is supposed to be a random sample and more about learning, and I'm not trying to convey the best strategy. But what I am saying is that, for example, the 3 white shoulders did not work well. There were 30 of them, and we can scroll through these now. View charts for the above, and there's the let's go through them. Okay, and that isn't the one. Let's go back here. Sorry, tools, backtesting your filter sets. I'm going to go view results, and 3 white soldiers. Okay, I'll click that, and we get 55, and I'm going to go view the charts and begin scrolling. There we go. Okay, so that looks great, right? Okay, oh, they're going up after I bought them. When did I buy them? Well, let's go back again, and we can turn on the hairline that tells us display a blue line. Okay, and let's look at that one again. You see, that's the beginning period of the screen, and there's the let's go through this. Okay, and what we've got is I'm just going to go back here again and do this again. Back testing your filter sets. We're going to go back, say, 3 days ago, and we're going to run it, and there we go. I'm going to go view results, and in this case we've got 3 white soldiers right here, and we get 13. Let's take a look at them, and there's what I wanted to see is before the first line you've got the 3 white soldiers. Okay, you see that? And after that you get to see what the return was over the 3 days. There's a better example, the 3 white soldiers. So ultimately, if we go back there, we can see that that one didn't work that well. Okay, so let's go back, and the 3 white soldiers was minus 0.3. Let's look at the count. There were 13, there were quite a few, but the engulfing, whatever that is, worked the best. And let's go view by return again, but it was no better than the template. So over a 3-day period, it seems that none of these candlestick screens actually made a difference. What I could do, just to show you another idea, is I could do a different set of 3 days. For example, I could go back, say, 5 days ago, or say 10 days ago, and go to 7 days. So this is a different period that I'm going to back test over, but it's still from 10 to 7, or about 3 days. So we should see, for example, in the white soldier, we should see the Let's go view results, and let's take the white soldiers, and it's actually the highest, and they all went down, and the market must have been down over that period because the template went down. But let's look at the 3 white soldiers. There were only 7, but let's take a look at what they look like. And so you can see there were 3 of them back here, and then the stock did go up. In that case, here were 3, and it went up. So you can see what's happening. And so out of these 7, it took the average rate of return, and so this example is more about the concept of creating your filter sets, selecting them for back testing, and doing your comparison. And you can see them by count, and there's a ranking system, and there's also by return. Okay, so the idea is to go through, make filter sets. You might combine these. For example, you might combine the 3 white soldiers with a MACD crossover, and that might actually rank it higher. And ultimately, we'll be working on this more to look for some different screens that might actually show significant relatively significant consistency in their results, whether the market is going up or down. So I'm going to leave that at the end of this backtesting video. Thank you very much.